G'day traders, Mindset Reset. It's Free Cash Friday, supporting my Detroit Lions as they head into the weekend to play the San Fran 49ers. Today was a huge day on oil. Other markets offered fantastic trades in the London session: Swiss franc, the euro, Canadian dollar, the pound. Brilliant Friday reversal trades, a first red day trade on the Canadian dollar, a reversal trade in the U.S. session on the Canadian dollar off the low of day after pinning down into the low of week. Some excellent questions from traders. I will go over some stuff in the a technical video going back through the templates for the week, specifically talking about timings, levels, and the signal days and the opportunities. One of the big things that I want to talk about today in terms of behavior of the trader, I added a new thing into my little nuance: timings, levels, behavior of price, and behavior of the trader, because the trader is the variable in the equation. Everything else is constant. Focusing on what you can control, controlling the controllables. Several traders will recognize the opportunities, and as I talk about, honing your skills in live time is something that takes time. So if you're struggling, one of the things I always suggest is to scale down to your smallest size possible and focus on the art of flawless execution, whether that's a micro lot, whatever that is relative to your account size. Demo account is, if you're new and you're just learning, practicing is paramount on a demo account. If you're already trading and you've hit a rough patch, or you haven't been able to get that consistency, scale right down next to nothing and just focus on mastering the art of execution. Because the trader himself or herself is, your emotions are going to kick in: impatience, impulsiveness, jumping around. So another excellent question was, how do I narrow things down? Well, typically what I do is I will look through the currency pairs for signal days and templates. And I'm only ever looking for usually one or two trades in a week on a currency pair. So it's easy for me to flip through, because often if a move's taking place in London, there's only going to be a couple of options. If we're at the end of the week, for example, we had Japanese yen, we had an inside day yesterday, first green day. We had a higher high, a breakout in the London session, and the dump, which is a perfect setup into closing price for the continuation trade in the US window. Same thing with the Swiss franc. After going down and consolidating at the low of the day, the low of the week, the reversal opportunity is there. But given the option of trading oil, an index, or gold, if there is a setup there, obviously there's more volatility. My experience on those instruments dictates that I will rather trade those, because I know that, again, more bang for the buck, I guess, so to speak, on those instruments once your experience and your ability to identify a best trade candidate. The next question with that is, how do I narrow it down? If I've got one or two instruments, how do I decide which one to trade? So a couple of things, and I talk about this, I post every day, the importance of just sitting on your hands and waiting. And so the reason I do that is because you'll be amazed, 90% of the time, in a lot of cases, by the time 9:30 shows up, especially on Free Cash Friday, the closing range of the week, is that you'll be amazed at how many times price comes back to a level at 9:30, if indeed there's a setup there. So today, for example, at 9:30, oil was right at the closing price level again at the New York Open. Right at 9:30, gold is right at the closing price level again, after putting in a peak formation after major red news. 3 pins to the high closing price for a move back down through the low of the day. Now, obviously, there was an entry prior to that, coinciding with the larger time frame. We had the market working the high heading into that second hour. Oil obviously had locked in the low of the day at that particular time heading into the New York Open. We dropped down 3 levels, 75 cents from the high of the day, went into consolidation, went lower, locked that in, and came back up to closing price level. What I like to do, and the longer you do this, you'll realize sitting around and waiting helps you to identify a best trade candidate much clearer and simpler, especially when there's major red news. So if you think in simple terms, major red news, a wick, large wick, that's 1 hour, first hour trade. So 1 hour, 2 hours, 9:30 New York Open. We may be in an existing move from one level to another. And then again, when the market reaches those levels, how does price behave? So managing yourself in live time, stepping back, be willing to wait. So the longer that you do this and you focus on the levels, you'll lose sight of the little candles moving all over the place and all this other gibberish, because the market moves from level to level. It's measured in time. Once it goes outside of a range, it will establish a new boundary. Typically, that will be, if it's a stop hunt, that can be 3 levels. That can be 25 to 50 pips on a currency. It's being willing to take profits, being willing to manage your risk and add in if you're into a parabolic move. So again, my objective is to be able to capitalize on a winning trade that's going to go parabolic. Parabolic typically will be coiled or be driven by other time frame traders. So we see oil today reverses at the high of the week. Well, that was a 3-level setup to the high of the week, and that's a setup for a vertical collapse, which means stand aside and wait until the market goes into consolidation. We had a larger time frame driving that move from Monday's opening range breakout. That type of understanding comes when you see these templates long enough. Like a great comment from a trader today was understanding when to stay at the screen longer. Today was an ideal day on oil. Typically, opportunities like that don't come around all the time, but it's Friday. It's free cash Friday. So Friday's the closing range of the week. We're in a range expansion on the longer time frame of Monday's opening range. I cannot tell you how many mistakes I've made. A lot of mistakes over time. Several. I've been in lots of winning trades where I've been over leveraged and not been able to hold on to them. I've been in losing trades and been over leveraged and not being willing to get out of those, and those will blow your account out. Everything is the same, repeating over and over again. Another great question today from a trader was that the Canadian dollar first red day. I wrote a detailed explanation of that. Didn't recognize that it was at the high of the day in the current day, but also into the high of the opening range and closing price of Monday. Everything comes off of levels. If we're in an existing move, it's going parabolic, we've broken from a level and we reestablish a level, so we've broken into an area that's out of balance, redraw the levels. There's always a level there, whether it's the high of day or low of day. Closing price is static. I'm going to go over that today again, a detailed explanation of understanding that the day starts again and there's a new auction process. There's 3 levels that every single trader has. They're concrete. Understand the power of that, because that is what the market is working off of. And once you see that, everything becomes clearer and clearer and clearer. So then managing yourself becomes easier, because you recognize that it's not about trying to figure out the price of the candles. We're waiting for the timing window. We're waiting for the market to arrive at levels, whether it goes out of balance at that timing window. New York Open Canadian dollar today, outside of the range, right at the low of day, 9:30. Another excellent example was Swiss franc, right at 9:30, low of the day, and set up for a short squeeze reversal, 25 pip stop hunt, closing out the range of the week, the closing range of the week into Friday's close. So everything is timed and measured. When you realize this, when you see it longer and longer, you'll step back and stop trying to figure out little price action reading and all that. It's very straightforward. Breakout traders trapped. Where's the money? Or breakout traders triggered into a market on one day. Day 2 reverses inside. Day 3, it's going to go after the money, whether it's in Asia, London, or New York. Maybe it pulls back and it doesn't go after the money, and it coils as an inside day. Now we potentially have a parabolic trend trade on day 3. Several different instances, but textbook playbook setups. They rinse and repeat. There's no guesswork. If you step back and look at the big picture, the template, you'll realize that all the other stuff is fugazi. Look at the closing price of the day. First red day, first green day, same thing. When it's there, you don't have to guess. The universal entry criteria puts you into the trade. So that's, straightforward. It's very simple. Timing window. If it doesn't look clean or if it doesn't look simple, perhaps it's not a best trade candidate. So managing yourself is paramount. Trusting yourself, stepping back, being willing to wait, sit on your hands. 2 or 3 trades. We had massive trades at the end of the backside of the week. Front side sometimes is messy. Last week, if we go back, believe it was the Euro, Wednesday, Thursday, Friday. Messy chart. And then this week, completely well-engineered price action. Well-engineered, very specific. It had a purpose behind it for traders to make easy free cash, and Free Cash Friday did not disappoint today for several people in the London session. So thank you again. We'll be going over that in a technical video. Again, just keep it simple. If it's not simple, then that means you don't see it yet. You shouldn't be getting frustrated or beat down. Just step back and really focus on trying to understand some simple things. The whole week is an auction process starting at closing price right from day 1. Monday's the opening range, the initial high-low of the week. Regardless if it breaks out, regardless if it's a narrow range day, or regardless if it breaks out and fails or breaks a level. Paul Tudor Jones, if the market's starting to give you an indication of going on a range expansion, let the market set up and confirm that thesis. So have a great weekend, traders. Again, if you're a football fan, hopefully you're cheering for the Lions. It's been a long time coming. It's going to be a tough game. San Fran's an awesome team. I love my football, Michigan national champions, and it's been a good year for football in the Great Lakes states. So have a great day, traders. Enjoy your weekend. Keep getting better. 1% better every single day in every aspect. Behavior of the trader is paramount. Bulletproof yourself for success. This is a winnable game. Have a great weekend, and may the markets go with you.